Hey, this is Jim. It's 8:30 a.m. in San Francisco, California on March the 14th. Please note that all discussions, analysis, and information presented are for general informational and educational purposes only and should not be construed as financial or any other form of professional advice. So I'll start with the quick view of the Anemoi 6-month chart. Nothing's changed here. I mean, this is going to be considered a really deep airplane, assuming we turn back up, and I'll show you a couple other things that make it look to me like we're going to turn back up. As far as weekly velocity here, you can see that on the last time that we moved up toward that weekly trigger, the backdrop of weekly velocity was actually more to the downside. So it's a more extreme reading of the downside than we have this week. So the only reason I bring that up is because it's just telling us there's no reason that that price can't revisit that weekly trigger. If that can happen this week, then what we'll do is we'll end up repairing that weekly velocity or even flipping positive going into next week. And then that releases us to where we can more easily get through that 628 level or even turn that into sort of support running up to 848. So here's one of the most important takeaways here. This is a really unnatural grinding move to the downside here. You can see the black price line. Let me get rid of velocity for you. So you can see that the black price line stair-stepping to lower lows. And you can see the hourly velocity registered its most bearish reading back in the morning of, or a couple hours into trading on March the 2nd. So this low, this low, this low, this low, these are all grinding lows against a backdrop of accumulation. So, you know, you have to be in the elephant category to create this kind of a positive bullish divergence. And this has been, you know, over like a 2-week period, which is unusually long and has a really kind of forced manipulative look to it. So anyway, that sets us up for a really sharp reversal to the upside. I'm going to show you what the volume characteristics look like because this is really important. So this is our 60-minute bar chart. And we talked about this setup here where we have this wedging volume, and you can see the spike highs that I've drawn this downtrend line off of. And then again, if you've never seen any of my videos and you're not familiar with what I talk about during the service, we want to have a second horizontal line that represents the sort of the top of the lower range of the volume. So we have two things. We've got the spiking volume here with our downtrend line, and then we've got what I call nesting or resting volume down here. And the idea is where you have this inflection point where you have a collision of the downtrend passing through this nesting or resting volume that you can anticipate a volume breakout. So the advantage there is that you can sort of step aside, monitor a stock and sort of wait until this timing element appears to start to look for a potential signal to get long. What we then had was we were looking for 3.5 million shares or greater on a green closing bar, and they took us right to the edge, but didn't quite hit that 3.5 million shares of 60-minute bar volume. And on both of the 3.4 million share 60-minute bars, they were both red. So these were both red. What we need now, since we broke above the 3.5 and registered a 5.811 million 60-minute volume bar this morning, we need to paint through that on a green bar. So what happens here is, because this was a red bar, because this volume, I'll tell you the exact volume, because this volume was 5,811,407 shares, but it was on a red bar, so closing to the downside in that first hour of trading. We need to, at some point today or tomorrow, see a 60-minute price bar at 5.812. Okay, 5,812,000 shares or greater, and we want the bar to close green. Once that happens, we should be off and running. And then if we're going to see sort of a May, June melt-up type move, we're going to need to see 15 million shares or greater on 3 consecutive green bars. So it has to be 3 hours in a row. We have to get ignition volume of at least 15 million or greater. And again, it has to be consecutive. It can't be 3 bars spread out. It has to be 3 hours in a row. And that can include the final stub of half hour of trading at the end of the day. Of course, U.S. market opens on the half hour, 9:30 in New York, 6:30 here on the West Coast. And so our hourly closing bars are on the half hour up until the final close of the session, which is 4 o'clock in New York, which means that last bar is only a half hour. If we were to do ignition volume into the end of the day, and the last 2 full hours, and then that stub 30-minute hourly closing bar that only contains 30 minutes of trading activity. If that were to close at 15 million shares plus, that also counts. So that's what that looks like. I'll show you guys quickly this. Well, let me bounce back to this really quickly. So you guys also know the significance of this thick yellow uptrend line and this dotted white speed line. If price can move up to the Anemoi hourly monthly trigger rather at 848, by default we would see re-entry into this expanding pattern, and that's where we could run really aggressively up toward this 1423 retest or this 2125 retest. I have a feeling that will take some time, but what we can do here in the short run, I believe, and these are 5-minute bars, is you can see this setup. We talked about this vibration level in the last video. So this is represented by this price break above this small degree downtrend here. Let's stub this off. Okay, so this price break here sets up our vibration level. So this is the A, B, C, D. All we need is an E. And if we can get this move above 545 today or tomorrow, and we see a nice tall green price bar that closes in the top end of the range, paints through 545, that'll be a buy signal based on the vibration sequence. Then as far as Anemoi, I just showed you that day trader setup with the nice bullish positive divergence on the hourly velocity level. You can see we can easily get above that hourly trigger today as well. And if that happens, you can see this 3 trigger cluster here with the hourly trigger, daily trigger, and weekly trigger. We could slingshot right through that. Now, the setup is really, really similar to this nice move that we caught here when we had that low do. We had that wilt buy candle that moved through this 470 level. And then we had 2 different hidden retest levels to shoot for in that last setup. We had that 665, that point of origin on that one was early morning on February the 7th. And then we had that 745 retest level that really was helped the acceleration move here and helped those call options really pump in value. And that point of origin carried us all the way back to late session on the 5th of December. So the point in bringing that up is that, we always want to see all these different components of the behavioral analysis model and Anemoi coming together, meaning that BAM is showing some hidden retest levels overhead that are fast market attack levels. And then Anemoi is also showing triggers which trigger velocity. So again, if we look at this new setup, we've got this hidden retest level here. Point of origin is going to be from the morning of February 28th. And then we have this, and that's $7.95. And then we have this 1005 retest level, carries us all the way back. Point of origin on this one's going to be all the way back to the sort of mid-session on September the 15th, 2022. So again, these are 5-minute price bars, but that's a hidden retest level. And so The point I'm getting at here is it's a very, very similar setup to where when we started to slingshot higher, we had two different retest levels to shoot for. We have the same beautiful setup here, and we can slingshot toward 795 hidden retest and this 1005. If we can hit that 1005 retest, at that point, we would be above this Anemoi monthly trigger. Obviously, if we were to do that during the month of March, we'd not only be above that monthly trigger, but we would re-enter above this uptrend line on this expanding megaphone melt-up fractal. I'll carry you back to the point of origin on that, and that would be late session on or early on January the 9th. Here's the associated speed line that matches this expanding megaphone melt-up fractal. And then if you guys have followed my work, you know the rules are we're looking for a dropout and we're looking for re-entry. And when we get a dropout and re-entry on high velocity, that's when we're anticipating a runaway move to attack the speed line. You can see here where the stock was manipulated, which is really common on these re-entries, but that left behind that pay me later level up above. And so in addition, you can see we've got this pay me later at 2045 from another aborted re-entry. So what's happened here is that the stock has become, in my work at least, has become more and more dynamically bullish. So the difference is a stock could be bullish, meaning the setup could call for a slow grinding uptrend over months and years. But when a stock is manipulated and sort of pushed to the downside, and it creates these situations where it leaves these hidden retest levels overhead and it leaves those pay me later levels overhead, you have a situation where once a stock like this turns higher on any kind of catalyst, it could be a forced catalyst from a liquidity event, a fund that gets caught in a bad position in a completely unrelated stock, commodity, currency market, whatever. It doesn't matter. The only thing that's important is that there's an outside influence that forces the shorts or a large short to cover their position. And then we know that once things start to move to the upside, irrespective of the catalyst, we have a setup here that's a fast market setup and a high velocity setup. So at the very least, we should be able to move really quickly and then rest for a while, kind of repair that velocity at the bigger picture, the 6-month chart I showed you guys, and then run again on another leg up. This is not as bullish as the May-June 2021 setup that I showed everyone and shared the public videos of. That setup allowed for a 3-week move straight to the levels that we hit. This setup is dynamically bullish, but sort of in stages. So the way I still think this is going to unfold, if it tracks my work at least, is we're going to see powerful moves to the upside, and then some violent trading, some repair work done on the bigger picture velocity, and then another run. But we're not too far away, within weeks, months for sure, of having a similar setup to May, June of 2021, to where we're back above the monthly trigger in the Anemoi terminal, and we've done some of the repair work we needed to do from the manipulative beatdown that we received. And at that point, we'll have more blue skies. Now, in my work, there's nothing to say that we couldn't go straight up to retest 1423 or even 2125. But what Anemoi will be telling me, at least at that point, if this happens, is that it wants to slam price back down and go through a vibration sequence and sort of repair velocity until this Anemoi monthly trigger at 848 becomes the new sort of support level, as opposed to the resistance level like we saw right here on that spike up in February, when they did once again the bogus halt. So that's what things look like from my side, you guys. Again, it's all about not only volume, but about volume at the 1 hour fractal, but a green close. So again, 5.812 million shares or greater anytime today or for the rest of the week on a green closing bar. That's all we need. So for this setup here, this smaller setup here, we only need a single green bar at 5.812 million shares. The bigger picture, if you're going to melt up, that requires 3 consecutive green bars of 15 million shares or greater. I don't think this is in the cards this week, but if it sparks off and we see ignition volume, then I'll be happy to be wrong on that, and the stock can be off and running. And certainly, if we post 3 consecutive green bars at 15 million shares or greater, we can take care of all these retest levels even this week. So we'll see what transpires. That's it from my side. That's my best effort. But again, leaning on Anemoi, that is a bullish setup, and that is a manipulative grinding price move to the downside. So, high 90% of the time, you resolve that structure to the upside, and violently to the upside. That's it from my side. Good luck, you guys.